All right, Talk Tickers listeners, welcome back. Today we're going deep on Disney's Q1 2025 earnings call.
Ooh, Disney.
Yeah, so
Big one.
it's a big one, right? They've got their hands in like every pot imaginable these days. So we're going to try to break down everything that's going on.
Yeah, I think what's really fascinating here is just to look at how Disney is navigating this like media landscape that's changing at like lightning speed, I mean, they're juggling these like legacy businesses like linear TV alongside these streaming giants, all while facing this like insane competition in like every arena.
Yeah, I mean, and there are companies so steeped in tradition, like it's just fascinating to see how they're adapting, right?
Yeah.
So big picture, Disney actually exceeded expectations this quarter with strong performance across the board.
Yeah, it's pretty amazing when you think about it, right?
Yeah.
I mean, it just shows like the staying power of like their IP, their creative engine, It's not just about quantity for them, it's about quality that really resonates with people.
Yeah, that's so true. I mean, they just know how to tell a story.
They do.
Okay, let's break down the highlights here. First up, the box office. Like Disney just crushed it. In 2024, they had the top 3 highest grossing films globally.
And they dominated. It wasn't even close.
Yeah, like, come on.
It's not just like churning out sequels, although they do that very well.
Right.
Right? But if you look closer, there's a very calculated strategy at play here, They're leaning into these like established franchises that people love, but they're also experimenting with new genres, new storytelling approaches, trying to capture like a wider audience, They're smart enough to know they can't just like rely on nostalgia forever,
Yeah, they're playing the long game, right? They want to appeal to our inner child, but also, attract these new generations of fans.
Exactly.
All right, so let's move on to streaming because, that's kind of the, 800-pound gorilla in the room these days.
It is.
What about Disney Plus? I keep hearing about like strategic shifts,
Yeah.
this potential crackdown on password sharing. What is going on over there?
Well, the new CEO, right, he seems laser focused on improving that whole like user experience. They're overhauling that recommendation algorithm, how annoying that can be.
Oh, tell me about it.
They're integrating more personalized content suggestions. They're even like testing out interactive features to keep viewers engaged, right? And all of this while simultaneously they're getting ready to tackle that password sharing dilemma.
Yeah, how are they going to do that, I wonder?
It's a bold move, but, I think it could pay off big time if they can convert those, what I call the casual viewers into paying subscribers.
I like that, the casual viewers.
Yeah.
So basically, they're trying to make Disney Plus so good that people won't want to risk losing access by sharing their passwords.
Pretty much.
Okay, that makes sense to me. That's good strategy.
Yeah.
But what about ESPN? How are they holding up in this, we're talking cord-cutting world? Everybody's streaming everything now.
I mean, they're not just holding up, they're actually like innovating, Think about it. Skinny bundles, brand new flagship app.
Oh, okay.
And they're laser focused on live sports.
Right?
Right. Because they understand they're adapting to how people are watching, right? So they're meeting those fans where they are, whether it's on cable, streaming, or, their dedicated app.
So, it's interesting. They're not clinging to the old ways of doing things.
No.
They're recognizing the power of, live sports and finding these new ways to deliver that experience to a wider audience.
For sure.
But what about the theme parks?
Uh,
I mean, they're facing challenges with these rising costs, The economy, nobody knows what's going to happen.
Yeah, but never underestimate the allure of Disney magic. I mean, theme park attendance is booming. That new Disney Treasure cruise ship is like exceeding expectations. People are eager to get back to those immersive experiences. And Disney is, they're capitalizing on that pent-up demand, I think.
The pent-up demand. I like that.
Yeah.
Ahoy, matey to those profits.
Exactly.
But I'm curious. So with all these, moving parts, can Disney realistically meet their, ambitious full-year guidance?
That is the million-dollar question, isn't it? I mean, the early signs look good, but there are definitely some headwinds to consider.
Like what?
Well, economic uncertainty, nobody knows what's going to happen. That could impact consumer spending. And let's be honest, the competition in the streaming space is only going to get more intense. Yeah. Right? It's going to be a tightrope walk, that's for sure.
Oh, speaking of tightrope walks, Disney's commitment to the NBA seems like unwavering, you know? Even with all the talk about declining viewership, that 11-year deal, I mean, that's a big bet on the future of the sport.
It is. And some analysts are saying it's a risky gamble, especially with all these other leagues and streaming platforms vying for, for eyeballs.
Yeah.
But Disney seems pretty confident in the NBA's long-term appeal, and its ability to attract like a global audience, right?
Yeah.
So they're playing the long game here, and, that might be a smart move if they can weather these short-term fluctuations.
Okay, so we've got a company juggling, what, box office hits, streaming wars, theme park expansions, and long-term sports bets. This is a lot to take in. I feel like I need a break already. But before we get into like the really nitty-gritty financials, I want to talk about something that really stood out to me in the earnings call.
I'm all ears.
So Disney seems to be walking this fine line between these cost-cutting measures and maintaining the quality of their content. Like, how are they balancing these seemingly, conflicting goals?
Well, they're being strategic, that's for sure. I mean, they're streamlining operations, in areas like marketing and administration, but they're also doubling down on content creation. They're betting that, premium content is going to be like the key to attracting and retaining those subscribers. And so far, the numbers seem to support that.
It's interesting because, both Disney Plus and Hulu, they saw a modest increase in subscribers even after those price hikes.
Right, exactly.
So, I mean, that tells me that people are willing to pay for quality.
Absolutely. It really does speak to that brand loyalty and the perceived value of their content library. They're not just throwing like any old show onto the platform, right?
Right.
They're curating, a selection of movies and series that people actually want to watch.
Yeah.
And they're expecting subscriber growth to actually accelerate in the second half of the year, fueled by, new content releases and those like enhanced tech features we talked about.
Content may be king, but, a seamless, user-friendly platform is definitely queen.
Yes, agreed.
And Disney seems to be getting that message.
Yeah.
But here's a question that's been on my mind. How are they leveraging their news divisions, like, ABC News and their local stations, in this whole streaming landscape?
Ooh, that's a great observation. They're using those divisions to kind of differentiate themselves from all the other competition out there, right?
Yeah.
So live news streams, including local coverage, that's attracting a wider audience, right? And it's tapping into a need that a lot of these streaming platforms, they haven't fully addressed yet.
It's true.
So it's a smart move, and it could attract like a broader demographic to the platform.
Yeah, it's like they're taking what some might consider like a legacy asset and turning it into like a competitive advantage.
Exactly.
They're appealing to those who want both, entertainment and information all in one convenient package.
Exactly. They're creating like a more holistic experience for those subscribers, right?
Yeah.
And that's, I think, a really powerful strategy in this like crazy fragmented media landscape that we're in right now.
Okay. So we've covered a lot of ground here, We've gone from box office bonanzas to streaming strategies, and it's pretty clear that Disney is a company in constant motion, right?
Oh, yeah.
They're constantly adapting to these like ever-changing demands of this crazy entertainment industry. But before we get into the detailed financials, I think it's time for some, bold speculation.
I love it. Let's do it.
You ready for this? This is our favorite segment. This is not financial advice, but hear me out.
All right, I'm ready. Lay it on me.
Okay, so Disney is all in on sports, right? We see ESPN, their commitment to the NBA, like they're investing in, all sorts of different leagues and stuff.
Right.
But what if they took it a step further?
Oh, I like where this is going.
All right, picture this. Disney launches a fantasy sports league, but not just any league.
Okay.
This one's directly integrated into their ESPN flagship app.
Ooh, interesting.
Yeah, think about it.
I like it.
You've got like millions of fans already using that ESPN app to like follow scores, watch highlights, stay up to date on their favorite, teams and players.
And by integrating that fantasy sports component, you're right. They could tap into this whole new level of engagement, They could turn passive viewers into like active participants.
Exactly. We're talking next level fan engagement. And this could drive subscriptions, even open up new revenue streams through things like in-app purchases or even, dare I say it, sports betting.
Now you're talking.
Yeah.
That's interesting. They've always been so good at creating these immersive worlds and experiences. You know what I mean?
Right. And a fantasy sports league integrated into the ESPN app, like, come on, that could be a game changer, right?
Yeah.
They could leverage their huge IP library, create unique themes and challenges and rewards.
Oh, I love it.
Imagine like competing in a Marvel superheroes fantasy league or a Star Wars fantasy draft.
The possibilities, they're endless. And it would definitely set them apart from all those other guys out there, tap into a younger, more digitally savvy audience.
Okay, I know we're getting a little carried away here.
Yeah, we are.
But let's be real. This is not financial advice.
Exactly. But it's fun to dream, right? And who knows, maybe Disney is already working on this behind the scenes.
Maybe they are. Wouldn't that be cool?
I know, right?
But for now, let's shift gears and really dive into the concrete numbers from Disney's Q1 2025 earnings call. We've talked strategy, we speculated wildly, but now it's time to examine the financial performance that has, investors buzzing.
Let's crunch those numbers.
All right, let's do it.
So first up, revenue, all right? Disney exceeded expectations. They hit a whopping $27.2 billion for the quarter.
Whoa, 27.2 billion with a B? That's insane.
It is.
Okay, how does that compare to, the same period last year?
It represents a healthy 8% increase year over year. So solid growth, especially considering all the, the headwinds that the media industry is facing.
Yeah, very impressive. Very impressive. Okay, what about the bottom line? What about those profits?
Well, they delivered diluted earnings per share of $1.15.
Nice.
Which is a significant jump from, $0.84 a year ago.
Now, those are numbers that would make Mickey Mouse himself do a happy dance.
I think so.
It seems like their strategy's really working.
It does. It really suggests that their, multifaceted approach, balancing those legacy businesses with these new streaming ventures, these innovative experiences, it's all yielding positive results.
Okay, so let's break down the revenue by segment now, all right?
Yeah.
Where did the magic happen this quarter?
Okay, the Parks, Experiences, and Products segment, that one took the lead, all right? They generated $8.5 billion in revenue.
No surprise there, right?
All right, no surprise.
Everyone wants to get back to those magical theme parks and cruise ships.
I know, I do. That pent-up demand is palpable, right?
It is.
And Disney's capitalizing on it with those new attractions and experiences, and of course, that successful launch of the Disney Treasure.
The Disney Treasure, I love it.
It's a good name.
Okay, what about the media and entertainment distribution segment? That's where, all the streaming wars are really raging.
They are.
Yeah.
They pulled in, get this, $16.5 billion in revenue.
Yeah.
Driven by a combination of, those linear networks and their direct-to-consumer offerings.
So both traditional TV and streaming are contributing to the bottom line. It's a pretty balanced approach, wouldn't you say?
I would, absolutely.
Yeah.
They're not just abandoning those legacy businesses, right? They're strategically evolving them alongside their streaming ventures to cater to all sorts of different audiences with, different viewing preferences.
Yeah, makes a lot of sense. They're not putting all their eggs in one basket.
Sure.
All right, but let's zoom in on the direct-to-consumer performance because everybody wants to know how Disney Plus, Hulu, ESPN Plus, how are they doing in this crazy crowded streaming landscape?
Well, they collectively reached a milestone this quarter.
Ooh, what is it?
They surpassed 250 million global subscribers.
250 million.
With Disney Plus, leading the pack at 165 million.
Okay, those are some impressive numbers,
They are.
Especially when you consider how fierce the competition is. Netflix, Amazon, everybody and their mother has a streaming service these days.
I know.
Right.
They're holding their own, though, They're doing well, and they attribute it to a few different things.
Like what?
Well, that strong brand recognition.
Yeah.
Their content library, people love it, and their strategic investments in, original programming.
Well, that's a good point.
Yeah.
Okay, but everybody wants to know, is Disney Plus finally in the black?
Well, they're getting there. They're making progress. They're not quite there yet.
Okay.
So Disney Plus reduced its operating loss to $500 million this quarter.
So they're still losing money, but not as much.
Exactly. The bleeding's slowing down. So they're really focused on balancing that subscriber growth with financial discipline, you know what I mean?
Yeah.
And as they continue to implement these cost-saving measures, refine their content strategy, and, maybe potentially crack down on password sharing, we could see those losses shrink even further in the coming quarters.
That's encouraging for investors who have been patiently waiting for Disney Plus to, turn a profit.
For sure.
But, let's not forget that Disney's also investing pretty heavily in its future, right?
Well, yeah, all that investment in content creation, all the tech upgrades, it's a lot.
Yeah, they're pouring resources into developing new films, TV shows, streaming exclusives, all that stuff. And they're doing it to keep audiences engaged and keep them coming back for more.
Content is king, right?
It is.
And Disney knows it. They understand that they've got to keep feeding the beast with all this fresh, high-quality programming, if they want to stay ahead of the game in these streaming wars.
And they're not neglecting the technology side either, right?
Yeah.
They're constantly like enhancing their streaming platforms,
Yeah.
improving personalization features,
Yeah.
just making that user experience so much more seamless and intuitive.
It's all about creating that, stickiness factor,
Mhm.
Keep those subscribers hooked and reduce churn, right? And those investments in technology, data analytics, user experience, it's crucial to achieving that.
So, okay, we've covered the highlights of Disney's financial performance here. Everything from revenue and earnings to subscriber growth and profitability. But what does it all mean? What's the key takeaway here for investors?
Well, I think the big takeaway is that Disney's a company in transition,
Yeah.
They're navigating this complex and rapidly evolving media landscape, and they're facing challenges, no doubt, but they're also showing that they can be really agile, they can adapt, they have a keen understanding of what consumers want,
So not just sitting back and, resting on their laurels.
Wow.
They're actively shaping the future of entertainment. They're leveraging their iconic brands, their beloved characters, that huge content library. They're creating compelling experiences across multiple platforms. It's amazing.
They are. They're not just a legacy media company anymore. They're like a powerhouse in the digital age. And their performance this quarter really reflects that, I think.
So they're a company worth watching, both for their entertainment value and their business acumen.
Absolutely.
But, before we wrap up this part of our deep dive, I think it's time for one last dose of this is not financial advice, speculation. You ready for another wild ride?
Hit me with it. I'm ready.
Okay, let's go full blue sky here for a moment.
Okay.
So we've talked about Disney's dominance in movies, streaming, theme parks. But there's this other frontier they've only, kind of dipped their toes into.
What's that?
The metaverse.
Oh, the metaverse.
I know, right?
That digital realm that's both exciting and terrifying.
Exactly. But think about it.
Mhm.
Disney is all about creating those immersive experiences. And what's more immersive than a virtual world where you can interact with, your favorite characters, explore all these fantastical landscapes, even attend virtual events and stuff.
Some natural extension of their brand,
It is.
Imagine virtual theme park experiences, interactive movie worlds,
Yeah,
digital meet and greets with Mickey himself.
I love
The
it.
possibilities are endless.
And let's not forget about all the potential revenue streams.
Oh, yeah.
They could sell virtual merchandise, offer premium experiences, even host virtual concerts and events. It's a whole new world of monetization.
It is. But, there are challenges. We have to be real about that.
Of course.
Building a robust and engaging metaverse that requires some serious investment, technological expertise, a deep understanding of user behavior in virtual spaces, all that stuff.
True. But if anyone can pull it off, I think it's Disney.
I think so, too.
They've got the resources, the creative talent, the brand recognition to make a Disney metaverse like a global phenomenon.
I
It'd really be huge.
Yeah, it's definitely a development worth watching, I think.
For sure.
If Disney goes all in on the metaverse, it could have a major impact, not just on the entertainment landscape, but, potentially on all of our lives as consumers, as digital citizens.
Okay, so we've explored some, wild what ifs today and contemplated Disney's, potential foray into the metaverse.
It's been fun.
It has. Remember, folks, this is all just speculative fun.
Purely hypothetical.
This is not financial advice, but it's always exciting to imagine what the future holds for a company as, as innovative as Disney.
It is. And speaking of the future, it's time to, wrap up this part of our deep dive into Disney's Q1 2025 earnings call. We've covered a lot of ground today.
Well, yeah.
From their strategic initiatives, their financial performance, to some pretty out-of-the-box speculation. It's been a fascinating journey.
It has been a fascinating journey through the world of Disney, a company that, never ceases to amaze.
For sure, they're a company to watch.
They are.
And we'll be back next quarter to break down their next earnings report, see what new adventures they've embarked on.
Can't wait.
Until then, keep it locked on Talk Tickers for all your earnings. Call deep dives.
That's right. We'll be back soon.
See you later. All right, so let's get into the numbers. You ready?
Let's do it. Let's crunch some numbers.
All right, first up, revenue.
Okay.
Disney exceeded expectations. They hit, get this, a whopping $27.2 billion for the quarter.
$27.2 billion. So that is a massive number.
It is.
Okay, so how does that compare to like the same period last year?
Well, it represents a healthy 8% increase year over year. So,
Wow, 8%.
yeah, solid growth, especially when you think about, all the challenges the media industry's been facing.
Yeah, absolutely. Okay, so what about the bottom line? What about those profits?
All right, they delivered diluted earnings per share of $1.15,
$1.15.
which is a significant jump from, $0.84 a year ago.
Those are the kind of numbers that make Mickey Mouse himself do a little jig.
I think so. Yeah, they're pretty happy over there.
It seems like their strategy is really paying off.
It does. It really suggests that, this multifaceted approach, balancing those legacy businesses with the streaming ventures and those innovative experiences, it's all yielding those positive results.
Okay, so let's break down the revenue by segment a little bit. Where did the magic happen this quarter?
Okay, the Parks, Experiences and Products segment, that took the lead. They generated $8.5 billion in revenue.
Okay, no surprise there, right?
Yeah.
Everybody wants to get back to those magical theme parks and cruise ships.
I know, the pent-up demand, it's palpable.
It's palpable. I love that word.
It is.
Okay, so what about the media entertainment distribution segment? That's where all those streaming wars are really raging.
Yeah, they are. They pulled in, get this, $16.5 billion in revenue.
$16.5 billion. Wow, that's a lot of streaming.
It is driven by a combination of, those linear networks and, of course, the direct-to-consumer offerings.
So both traditional TV and streaming are contributing to the bottom line. It's a pretty balanced approach, wouldn't you say?
I would, absolutely. They're not just abandoning those legacy businesses, they're strategically evolving them alongside those streaming ventures to, cater to a lot of different audiences with different viewing preferences.
Okay, that makes a lot of sense. So let's zoom in on the direct-to-consumer performance because, everybody wants to know how Disney Plus, Hulu, ESPN Plus, how are they faring in this, super crowded streaming landscape?
They collectively reached a milestone this quarter.
Ooh, a milestone. What is it?
They surpassed 250 million global subscribers.
250 million, wow.
With Disney Plus, leading the pack at 165 million.
Okay, those are some pretty impressive numbers, especially when you consider how, fierce the competition is out there.
It is, but they're holding their own.
Yeah.
They're doing well, and they attribute it to, a few things. That strong brand recognition,
Right.
That content library, people love it, and their strategic investments in original programming.
It's true. They've got some great shows. Okay, now everybody wants to know, is Disney Plus finally in the black?
Well, they're making progress. They're not quite there yet,
Yeah.
So they reduced their operating loss to $500 million this quarter.
Okay, so they're still losing money, but not as much.
Exactly. The bleeding is slowing down.
Okay.
So they're really focused on, balancing that subscriber growth with, financial discipline.
Right.
And as they continue to implement those cost-saving measures, refine their content strategy, and maybe, potentially crack down on that password sharing, we could see those losses shrink even further in the coming quarters.
That's encouraging news for investors who have been, patiently waiting for Disney Plus to turn a profit. But, let's not forget, Disney is investing pretty heavily in its future as well.
Right. All that content creation, technology upgrades, it's a lot.
It's a lot, but they're pouring resources into developing new films, TV shows, streaming exclusives, all that good stuff. And they're doing it to, keep audiences engaged and coming back for more.
Content is king, right?
Content is king. And Disney, they know it, they get it, and they're not neglecting that technology side either.
No, they're not.
They're constantly enhancing those streaming platforms, improving personalization, making the user experience that much more seamless and intuitive.
They are. It's all about creating that, that stickiness factor.
The stickiness.
Yeah, keep those subscribers hooked, reduce churn, and those investments in technology, data analytics, user experience, it's all crucial to achieving that goal.
Okay, so we've covered, a lot of the highlights of Disney's financial performance here. Everything from the revenue, earnings, subscriber growth, profitability. But what does it all mean? What's the key takeaway here for investors?
Well, I think the big takeaway is that Disney's a company in transition.
Yeah.
They're navigating this very complex and rapidly evolving media landscape. And yeah, they're facing challenges, but they're also demonstrating, agility, adaptability, a real keen understanding of what consumers want.
They're not just resting on their laurels. They're not just sitting back and saying, oh, we're Disney, we're good.
No.
They're out there, they're actively shaping the future of entertainment. They're leveraging those iconic brands, those beloved characters,
Yeah.
that huge content library to create all these compelling experiences across, multiple platforms.
It's impressive.
It is impressive. It really is.
Yeah, they're not just a legacy media company anymore. They're a powerhouse in this digital age, and their performance this quarter, I think it really reflects that.
They are definitely a company to watch, both for their entertainment value and their business acumen. I mean, they know what they're doing.
They do.
But before we wrap up, I think it's time for one last dose of this is not financial advice speculation.
Oh, let's do it. I'm ready for another wild ride.
All right, you ready? Buckle up. Let's go full blue sky here for a minute.
All right, blue sky. I like it.
We've talked about Disney's dominance in movies, streaming, theme parks, but there's this other frontier, that they've only kind of dipped their toes into.
Okay, I'm intrigued. What is it? What is it?
The metaverse.
Ah, the metaverse, that digital realm that's both fascinating and vaguely terrifying at the same time.
Exactly. But think about it. Disney is all about creating those immersive experiences, right?
Right.
And what's more immersive than a virtual world where you can interact with your favorite characters, explore those fantastical landscapes, attend virtual events?
It's a natural extension of their brand, isn't it? Imagine virtual theme park experiences, interactive movie worlds. You could have digital meet and greets with Mickey Mouse himself.
I know, right? The possibilities are pretty much endless.
Endless and lucrative.
Oh, yeah. Let's not forget about the potential revenue streams here. They could sell virtual merchandise, offer premium experiences, host virtual concerts, events. It's a whole new world of monetization.
It is a whole new world, but there are challenges, of course.
Of course, yeah.
Building a robust and engaging metaverse, that takes a lot, Significant investment, technological expertise, a deep understanding of user behavior in these virtual spaces. It's not easy.
True. But if anyone can pull it off, I think Disney can.
I think so, too. They've got the resources, the creative talent, the brand recognition. I mean,
Yeah.
they could make a Disney metaverse a global phenomenon.
It'd be massive. Absolutely
It
massive.
would be a game changer.
Okay, so we've explored some pretty wild what-ifs today.
We have.
We've contemplated Disney's potential, foray into the metaverse.
It's been fun.
It has been fun. Remember, folks, this is all speculative. This is not financial advice segment,
Purely a hypothetical.
but it's always exciting to kind of imagine what the future holds for a company as innovative and as, forward-thinking as Disney.
It is. And speaking of the future, I guess it's time to wrap up our deep dive into Disney's Q1 2025 earnings call.
I guess it is.
We've covered a lot of ground today, their strategic initiatives, their financial performance, and of course, some out-of-the-box speculation.
We had to.
We did. It's been a fascinating journey.
It has been a fascinating journey through the world of Disney, a company that continues to evolve and adapt and entertain audiences all over the world.
They're definitely a company to watch.
They are, for sure.
And we'll be back next quarter to break down their next earnings report and see what new adventures they've embarked on.
Can't wait.
Until then, keep it locked on Talk Tickers for all your earnings. Call Deep Dives.
That's right. We'll be back soon. See you later.